Okay, so we're going to dive in. So my name is Adam Halpern. I'm the president and owner of Indicator Warehouse, and I have my longtime friend and my original teacher, Eric Sempf, who will be talking with us in a minute. Eric's our resident trading guru slash teacher slash joke maker, etc. Let me just do quick housekeeping and give you a quick overview of what today is about, and then also what today's not about. So today is primarily, for this presentation right now, going to be for people who are new to Indicator Warehouse, who are new to our trading systems and to Raptor in general. And if you already own the previous version of Raptor, Raptor 1.0, don't worry. As you know, as a customer of Indicator Warehouse, any software that you own from us, you get upgrades for free for life. However, if you are a current owner, I do recommend you stay on because you get to hear about the exciting new developments that have gone into Raptor 2.0, and I think you'll be very pleasantly pleased when you hear that. All right, so for the folks who don't know us, we've been around for, 7 years now, which I think in the internet world makes us veterans, if not old people. And we've been a tier 1 top partner of NinjaTrader, the underlying platform for our stuff, really since the beginning. After about 2 years of being in business, it was clear from our customer feedback that what our customers really wanted was not so much just to play around with indicators on their own, but to have something more of a methodology, some more structure to their trading, what we would call a system. And so one of the luxuries of having been in business so long is, quite frankly, I don't have to be as smart as I used to be. I now have a wonderful community of customers who are very open about sharing feedback and requests, and that helps drive our development, which is terrific and helps us define what we need to be creating for our community. So with that, I'm going to hand you over to Eric Sempf, as I said, my original teacher and good friend. Thank you.
Well, good afternoon, everyone. It's nice to be talking to you again. We're going to show you kind of the overview of the new Raptor trading system. The Raptor 2.0 came about to address a very common issue among traders, and that's really knowing when to pull the trigger. You know, we get the signals on the system. How do we know this is going to be a high probability signal, one that we can take with a great deal of confidence? So let me define high probability for you, because some people have been questioning, well, how do you guys define high probability in the first place? A high probability signal is one that has a very good chance of reaching its profit objective. So when the Raptor 2.0 signals you with a high probability signal, that's a signal that should make its profit target. As you're going to see, many times it will go much further, but that's what qualifies it as a high probability signal. The other thing you should know with the Raptor is that the Raptor tends to focus on quality of signal over quantity of signal. So what it does is it takes the best of the programming of the Indicator Warehouse tools, and it focuses on those signals that have a very good chance of working out. So let's actually take a look at a couple of screenshots so that you can see how this is going to work out, and then we're going to take a look at the market. We're going to take a look at a few markets so that you have an idea how this is going to work. So what the Raptor does is it will give you an early warning that a high probability signal is forming. So here in this screenshot, you can see on the top right corner, it's printing a crossover buy signal. It's warning you that a crossover buy signal is forming. This is one of the high probability signals. And so you still get that ready, set, go formation where you get an early warning, you get the display. You can also set up for email alerts. We don't have the mobile phone alert just yet, but you do get an early warning that the signal is about to print, giving you a chance to set up your trade. So the cloud crossover signal here is one of our high probability signals. This is what is the number one high probability signal for the Raptor. So let's take a look at how this particular trade played out. And you can see that the signal printed and it had a reasonable amount of follow through to it. Certainly, it found its high probability profit target without too much difficulty. And this is an instance where the market actually went a little bit further. This particular chart we're showing here is on gold. I tried to select a few different markets so that you can see the Raptor signal will actually produce signals on various markets. So it doesn't matter whether you're trading a stock index like the E-mini S&P or the NASDAQ or the mini Dow, one of the futures markets like crude or gold, or even some of the currency markets. If you're a Forex trader, it's still going to produce those high probability signals for you. So the cloud crossover signal is signal number one. And when we go to the Raptor chart, I'll explain some of the features of the chart as well. The number two signal, our high probability signal, is the soft edge buy or the soft edge sell, depending on which way the market is trending. This is actually the high probability counter trend signal for the Raptor. So the Raptor has trend signals, that's the number one signal. It has a counter trend signal, that's the number two signal. And it will form when the characteristics of the tool start to indicate that maybe the trend is starting to shift. So the number two signal, you can see, again, we get the warning that the soft edge buy is forming. We get the warning dot, the triangle hash mark prints when the signal is complete. And then you can see that the signal itself prints and we get a reasonable amount of follow through again, at least enough to find our high probability profit objective. The third signal is the hard edge buy or sell. This is a continuation signal. It is, again, a high probability signal, one that you can take with a great deal of confidence. So it's going to develop once a trend is underway or once a trend is trying to get underway. And you can see in this instance that, again, we had some reasonable follow through coming off of this signal. All right, so those are the new features of the Raptor 2.0. It's going to focus on producing high probability signals. It's going to warn you when these signals are printing so that you get a chance to get in there and set up your trade. And then, of course, you get the signal printing on your chart and the follow through from there. So let's take a look now at some of the charts here. All right, so, well, today was actually a quiet day. I may go back to Friday's session. The charts I have here, I've got the NASDAQ on the top, I've got the E-mini S&P underneath. You can see a relatively quiet day, rather sideways. Let's start here with the NASDAQ. I'm on the West Coast here, so the market opened 6:30 my time. We produce a cloud crossover signal, followed by a couple hard edge bounce signals, and you can see that the trend, it was struggling, but the overall bias for the day was bullish, and we just kept getting bullish buy signals throughout the day. But here, allow me to go back to Friday's session, which is probably a little bit, yeah, here we go. Friday's session is looking a little better. So the market opens around here, first half hour trading, the market's a little bit sideways, and then we produce our cloud crossover signal. And again, we would have had the early warning so that we would have had plenty of time to go ahead and set up our trade, and then the signal prints. And the number one signal is a very high probability signal. it tends to have some pretty good follow through. So if you're a trader who likes to have a runner in play, or perhaps take partial profits and try to run out part of your position for greater profits, the number one signal is a very good signal to do that. It usually initiates a trend, and you'll get some very nice follow through on this. Now, for those of you who haven't seen the Raptor before, let me just go over the Raptor components really quickly for you. You can see that the Raptor's got a double cloud on here. This is not an Ichimoku cloud. I know it looks like one. Everybody says, oh, you got an Ichimoku cloud on there. No, it's not. It's specific to the Raptor. The cloud gives us our directional bias. So when the clouds are stacked this way with what we call the soft edge over the hard edge, we're going to be more bullish. And then if the charts are, pardon me, the clouds are stacked the other way, we're going to be more bearish. The blue bars are going to be bullish, the red bars are more bearish, and then the yellow bars are more neutral. The hollow body bars simply mean that the bar closed above the open, so it's a more bullish bar. A solid body bar means the market closed below the open, so it's a more bearish looking bar. So you can see we had a number one signal here. Very nice trend resulting from that, a good 10-15 minutes at least. And then the market does a little bit of a retrace here, comes back into the hard edge, and we produce a number three signal. And remember, the number three is our continuation signal. And that took us, well, pretty much through the rest of the session. And then early in the afternoon, we produce our counter trend signal, our number two counter trend signal. The market gave us a little bit of heat before finally falling off. Typically, our profit objective for a counter trend signal would be the hard edge of the lower trading band. So it looks like before the close, they came up a little bit short of that, but even so, the signal printed a little bit early, got a little bit of heat, but we did get some pretty nice follow through on that. So that was off of Friday's session. Let's take a look at the E-mini S&P. And today the E-mini very, very sideways, but let's take a look here again at Friday, which was a little bit more active. So the market opens right about here, and we're producing, the market opened right here. We're producing a sell signal, a counter trend signal, right out of the open. And we had a little bit of follow through on that. And then about a half an hour later, we produce our number one signal. Now, you shouldn't be concerned if the market gives you a little bit of heat. I know some of you are looking at this and saying, well, wait a minute, what's going on here? You produce the signal and the market peels against you. For that, we're not going to get into that too much today, but we're going to use this tool here, the Trade Manager, to control our risk. So even though you're looking at a trade like this and you're getting the warning that you're producing a cloud crossover signal, you wouldn't necessarily jam your stops right in below the low. I will say that the Raptor tool is very good at picking up immediate market momentum. Most times you will get a signal and the market will just keep going from there. But occasionally you're going to get a signal and the market's going to give you a little bit of heat. But by using this tool here on the right, which is our Trade Manager, you can protect yourself. You can cap your exposure. In this case, I've capped it at 2% of my trading capital. So I'm not going to put myself in a position where I am going to lose an exorbitant amount of money. But we'll get to that a little bit later. So we produced the cloud crossover signal. That was followed up with the hard edge bounce signal, the number 3 here. And then, of course, we got, again, some very nice follow through off those signals. So that's the whole point of the Raptor 2.0, is that it takes a lot of the subjectivity and guesswork out of your trading. It makes it easier for you to pull the trigger and to do it with a great deal of confidence. It's very simple to use. The charts warn you when the high probability signal is about to print and which one it's going to be, whether it's going to be the cloud crossover, the soft edge buy or sell, which is the counter trend signal, or the hard edge bounce, the continuation signal. And then you can, while the signal is printing, you will have the ability to set up your trade. So unfortunately, I can't show you right now. That's why I showed you those screenshots earlier, because this actually prints in real time. It would say up here, hard edge bounce forming. And then you would know to set up your trade to take advantage of the hard edge bounce. Right? And then once the signal completes, then it prints the number 3. So again, that's just a very, very quick overview, but that is the whole purpose of the Raptor trading system, is to make it, like I said, easy for you to recognize when a high probability setup is coming along, making it easier for you to pull the trigger on the trade. You're not left second guessing yourself, gee, should I get into this trade or shouldn't I? And you know, you can get in there, you can take the trade, you can hit your high probability target, and depending on how the market is responding, you may even be able to hold on for a little bit more. Like here we are, we just produced the cloud crossover to the short side. We're now producing a hard edge bounce signal. Of course, this is after hours, but here's an opportunity where we could perhaps take a look at shorting the market off of this continuation and a possible breakdown lower. All right, so I see there's a few questions here. Craig's asking, so the shaded area is where you take the trade? Yes, sir. The shaded area, the highlights in behind show you where that high probability signal printed.
Hey, Eric, can I step in for a sec?
Absolutely.
All right, so for the newbies on the call, let me give you a little just overview of what we're famous for. So sometimes we're we're a victim of our own design. One of the things that we're known for with our systems is just how clean they are. And so what looks rather simple or easy to use on the surface actually has a lot going on under the hood. And obviously that's by design. The whole point is not to have a complex experience when you're trading. That just leads to stress at best and analysis paralysis at worst. And so for the people on the call that own the first version of Raptor, they're used to the terms that Eric's using, the names of these setups, because Eric and our customers have been using those setups in the trade room or training room for over a year now. What makes this so special is that we've taken those setups, which involve, like most discretionary systems, some subjectivity. You have to be able to identify them, and we've programmatically made them available on the screen. And so, whereas before some of the skill involved was learning to identify visually these setups, now the software, literally tells you we got a number 1, we got a number 2, or a number 3. What Eric was talking about regarding the pre-signal, if you will, that does happen only in real time, and what that's doing is warning you that a 1 is forming, or 2, or 3. And so again, one of the things that we focus on when we're doing our system design is to give the end user as much time as possible to get ready for the trade, right? So that you don't have people jumping on a signal and then chasing it if they miss it. That's the wrong way to trade. And so again, this idea of having a very clean chart so that it's easy to use, very simple, has always been a driving force in our design, and we continue that with the Raptor 2. The accuracy element of this is those 3 setups are the setups that have had the best follow through for Eric and the group for over a year now. And then once you feel more advanced, you obviously saw on the screen that there are some potential other signals on there but that's more advanced once you get used to the standard high probability ones that we have programmatically put into the program. The other part that we're not going to go into now is that product you see on the right-hand side. It basically replaces ChartTrader. It is an extremely important part of the overall solution. It is what allows you, the trader, to not have to worry about basically draining your account. And that's called the Trade Manager. And Trade Manager's primary focus or purpose is to help you cut your losses short and let your profits run, so that, I mean, that's how money's made in trading. And I know, I'm sure you've heard that one before, right? Cut your losses short, let your profits run. That's one of those easier said than done things, and that's what the software does. It helps you do that, so that basically you're protecting yourself when you're trading and maximizing your profit or your wins.
Someone was asking here about Forex markets and currencies, so that's Bill. Bill says, I trade Forex all the time. Could you show some Forex chart setups, please? Now, Bill, I don't have the Forex on this particular data feed, but I do have the futures. So I'll show you the 6E, which of course is the Euro-US pair. And we'll dial back to when we had the London Open. So London opens, well, right about here somewhere, around midnight my time. And we had a number 1 signal form, and we got a little bit of follow through on that. And we had a couple number 3 signals. Now, this is, again, these signals, just because they may not have as much follow through sometimes as you expect, they're designed to reach their high probability profit objective. The profit objective for most of these trades would be $100 per contract. Now, the number 1 signal does have a tendency to run a little bit further. So if you're looking to have a runner in play, I would normally do that on a number 1. So here we get a number 1 to the other side, and we got a little heat, and there we go, we got a little bit more follow through on that. So there's the euro, today's euro, and how the market responded to that. Let me see, just for kicks, let's see if I can get the British pound on here as well. And we'll take a look at the British pound. John was asking, I take it that you don't need confluence with the Raptor filter being the same color as the trade. Certainly not with the counter-trend signals. No. The counter-trend signals, of course, very often the Raptor filter will be out of sync. All right, well, we had some really nice action here on the British pound today. It took a really sharp turn lower, or sorry, that was Friday's session, and continued on today as well. But if we go back here to Friday's session, you can see it all started here with this number 1 signal, which was quickly followed by a number 3 signal, and then the market just never looked back. That's really, that would be my day right there. I wouldn't need to take a whole lot more signals than that. Just grab one of those and you're in good shape. Let's see what was going on in the, let's see if I can get the Aussie dollar on here.
So Bill, real quick, just so you know, the system comes with 2 different chart templates. One is what you would load for futures trading, and then the other is what you would load if you were doing, spot Forex. And because there's some cloud settings that are a little different, but definitely the system itself from the signal generation works with Forex, futures, and equities. So there's no issue there.
Let me load the Aussie dollar here on this other chart. We do have, like Adam said, separate settings for some of the markets. Here's the Aussie dollar today, and we got a nice signal to start the day right there, a number 1 signal, followed by a number 3, and then of course the market just never looked back. So again, the Raptor, it sacrifices quantity of signals for quality of signal. because, as many of you know, the key to successful trading is not trading more often, but rather correctly capitalizing on those higher probability signals. PK is asking, can Raptor 2 also be used with time-based charts, i.e. a 1 minute, or do you always recommend the indicator warehouse mean Renko? You can use a time-based chart if you like. Let me throw here a 1 minute chart on the Aussie dollar. It will still print signals, oops, but you can see, well, the Aussie dollar is probably not the best one to look at. Let me throw the euro on here. It's still going to produce the signals, it's just, it's been designed to use it with the mean Renkos. So it will still produce the signal, however, you know, it's perhaps not ideal.
Yeah, I mean, I'll just come out and say it. You know, we've tested and designed it to run with the mean Renko bars. So, you know, mechanically, what Eric is saying is true. It will run on a minute type bar, but you know, from a support perspective, you know, that's not something we're going to be able to stand behind because we just simply haven't tested it accordingly. It wasn't necessary.
Yeah, the mean Renko bars really are pretty tough to beat. They've got a very good way of showing you, you know, where the supply and the demand is, where the buyers are coming into the market, where the sellers are going to be more active. So it's a great charting feature.
Speaking of features, someone asked about voice prompts, and yes, so each of the individual setups, the 1, 2, and 3, all have their own voice prompt, and actually they will warn you when a setup is, you know, setting up, pardon me, when a signal is setting up, and then also when to take that signal. And so that's all been programmed in.
BB is asking, can you explain the 1, 2, and 3 signals? Absolutely. Here, I'll just go over them quickly for you. So the number 1 is the crossover signal. This tends to be the initiation of a trend. This is the type of signal that you're going to, if you're interested in putting a runner in play, or perhaps having a higher or larger profit objective, this is probably the signal you're going to do it with. So that's the number 1 signal. The number 2 signal is the counter trend signal. It's the what we call the soft edge buy or the soft edge sell, because it occurs or tends to occur at the soft edge of the trading cloud. Sometimes this, depending on the market conditions, this can have a pretty good follow through to it as well. And we go over those conditions in the trading room all the time. But generally speaking, this is a high probability signal. You should at least reach your high probability profit objective. Technically, that tends to be the hard edge of the larger trading cloud, and that will print a number 2 signal. The number 3 is the hard edge buy or sell. It is a trend continuation signal, so it tends to print after the number 1, and it usually develops when a market is already in trend or struggling to get into trend. And as I mentioned, it's a continuation signal. So it should at least reach its high probability objective, although sometimes it will go a little bit further than that as well. And the market will print, or the chart will print a number 3 for that. All right, so that's just a really quick overview of the signals, and we do go over them in the trading room all the time.
Eric, we have a question if each of the individual setups have different profit objectives.
Well, that's a great question. We've got like our preset profit targets, which tends to be $100 per contract. However, sometimes in the trading room, we'll incorporate the support and resistance lines from the support and resistance suite as profit objectives. Sometimes we'll focus on swing highs or lows as profit objectives. In the trading room, I go over how to correctly use risk reward and how to forecast where the market is likely to go to next. So we'll look at things like measured moves and risk reward, or correct risk reward. It's not what what you read about all the time and what most people think risk reward is. But generally speaking, our first high probability profit objective is the $100 per contract objective. And after that, we'll look at things like support and resistance lines, swing highs and lows, measured moves, and so on.
Folks, real quick, were you able to see the link in the chat box? It says indicatorwarehouse.com/Raptor-2. Did that show up? Hang on. I've got some no's, so I'll put it back in there again, but also just it's pretty easy to remember the link. So it's our homepage, indicatorwarehouse.com / the word Raptor, RAPTOR -2. So Eric, I know probably shouldn't be getting into too much technical here, but what's your take on chop and how the Raptor deals with that?
Well, choppiness is always a concern for traders, right? And the nice thing about the Raptor is that it borrows from the Hawk scalper. And the Hawk scalper is very good at picking up market chop. And when you start printing these clusters of yellow bars, and they're printing at more or less the same price level, that's an indication that the market's actually probably in a choppy phase. Now, you know, traders always say, well, what should I do when I'm in chop? My suggestion is the best thing for you to do when you recognize the market's in chop is to allow it to get out of chop. And what that means is allow the market to break out. Typically, it will retest that breakout, and after that, it's going to produce a signal. That's the signal you're going to want to concentrate on. And likewise, if it breaks to the short side, it's going to try to retest, and then you're going to look for that signal to print and that opportunity to get short now that the market's outside of that chop zone. So with the Raptor, when we see a lot of yellow bar clusters printing, we tend to recognize that the market's in a choppy phase or perhaps trending sideways. And it's going to make us a little bit, well, I don't want to say selective because a high probability signal is a high probability signal. But what you do when you recognize the market is perhaps in chop, and admittedly when the signal printed, we would not have recognized it as being in chop just yet. But because it's a counter trend signal, I typically allow a slightly wider stop. I'll allow the trade manager to control my risk for me. And then when the market begins to struggle like this, at this point, I'll start to see all these yellow bar clusters, and I'll start to say, okay, the buyers are making an effort to move the market higher. It's time for me to start getting more aggressive with my stop. So at the very least, I'll roll it here. I may even choose to roll it up a little bit, especially these bars with these tails to it. But let's say I even leave it right there, and the market turns around and stops me out. Okay, it was a high probability signal. And by the way, folks, when we say high probability signal, we don't mean 100%. I hate to burst any bubbles here, but you will still encounter the market producing a signal where all the factors are in play. It should go higher. It tries to go higher, but it reverses and stops you out. This is why your account protection is so important. This is where the trade manager comes into play. So even though we got stopped out here, we were able to reduce our risk so that the stop out, we started at 1%. So this stop out effectively represents 0.5% of my trading capital. So those kinds of losses are not the kind that are going to damage your account. Rather those losses where you're losing 7, 8, 10% of your trading capital, those are the ones that are going to that you're going to regret. But when you get tagged for 2%, 1%, 0.5% of your trading capital, those are the ones that you can come back from and continue trading. So it's a high probability signal. Um, the market did not get the follow through that we were looking for, but it did give us an opportunity to adjust our stops. So depending how aggressive we were with the stop, got stopped out for half of the original amount, could have got stopped out even closer to break even if we were more aggressive. But again, that's something we go over in the trading room. But to answer your question, when we see a lot of these yellow bar clusters printing at more or less the same price level, that tells us that the market is perhaps choppy, sideways. The best course of action, let the market get out, retest, wait for that high probability signal, then get in. And you'll have a much greater probability of success.
All right, I got time for a couple more questions. Again, anyone who owns version 1, if you have any questions about what's different between version 1 and version 2, you'll also have noticed that there's been an upgrade to the trade manager, difference between that. That's not for now. So I'll put me and Eric's contact information in there, although by now you can get a hold of us, of course. And that's the kind of stuff that we'll cover in the trade room and with ongoing information from us, after the fact. This is really just about high level for Raptor 2. So someone asked if Raptor works with MT4, and the short answer is no, and the long answer is because MT4 is simply not sophisticated enough to handle the software, or the complexity of the software, what's going on behind the scenes, and so just we couldn't translate it over to something that's as rudimentary as the MT4 platform. So you will need some version of of NinjaTrader, and you can go to their site, but basically they lease it monthly, or you can get a permanent license, and there's variations of that. The nice thing, though, is that you can use NinjaTrader for free while you're sim trading or practicing, and our software will work on the simulated version of NinjaTrader just as well as the live one. And then for those of you that are NinjaTrader savvy, and you know that NinjaTrader 8 just recently finally came out after all these years, this version that we've been working on is for NinjaTrader 7, as is all our software at the moment. However, we're already working on the NinjaTrader 8 version, and it's slated to come out before the end of this quarter. You can imagine that, again, the stuff that's going on behind the scenes here is not a simple variation of a standard indicator, which is much easier to transfer over to NinjaTrader 8. There's a lot going on here, particularly around graphics. NinjaTrader 8 redid their entire backend on how they handle high-end graphics like ours. And so we're definitely going to make sure we thoroughly test it for NinjaTrader 8 before we just bring it to market and risk any surprises. But I will go back to the original comment I made from my version 1 owners. If you own Raptor or any of our software now, when the NinjaTrader 8 version comes out, it's yours for free. There's no upgrade fee involved. So it's important to know.
Adam, I see a few questions here regarding the tick size and the main Renko bars. Some people are saying 8 ticks seems awfully fast, and what settings are you using? The 8 ticks is actually the default for the vast majority of the markets. The E-mini S&P, unfortunately, one of the most popular markets, yet it's the one that falls outside of the default parameters, and we have alternate settings for markets like the E-mini S&P. The 8 ticks do not print, or an 8-tick mean Renko does not print like an 8-tick tick bar, which would be just a blur. It would just be unfolding on your chart so fast there's no way you could ever take a trade. You can tell here from the timestamps how quickly some of these bars are printing. So for instance, this bar here where the signal printed was at 12, the signal bar itself engaged almost 2 minutes later. So you do have time to get these trades on once the signal starts to print and you get the warning in the top right corner of your screen. BB is asking, does this work for traders in Europe? Yes, we actually have several European traders, and they're trading with the Raptor. Let me just address this quick question here because I saw a few questions about stops. Jim's asking, with the profit target, do you use preset stops, or how do you do your stops? Well, we get into this in a lot more detail in the trading room, but just very quickly, we allow the trade manager to control our stops. The trade manager also has 16 different stop strategies, and these are all fully customizable. So the way the stop strategies are displayed is via these blue dots, and you can make it, you know, more conservative if you like, or more aggressive if you want. But generally speaking, because the trade manager controls our risk, so what I mean by that is it doesn't matter whether I put my stop right here, note the risk amount, it's about $425. Now that's 2% of my capital. Don't get all excited if that's, you know, seems like a lot of money. But notice that $425, okay, a little bit of a rounding thing going on here, but I can place my stop way down here and my risk is still set at 2%. Or I can place my stop way down here. Oh, still a little bit of a rounding thing going on. Let me put it a little deeper. You can see I'm still running the same risk amount. So whether I keep my stop ultra tight or use a more reasonable stop, the risk amount does not change. And we get into that a lot more in the trading room itself. But to answer your question, typically, a lot of times what I'll do is I'll start the trade with, say, a swing high or low stop. So in this case, I would set my stop probably down there. This would be my initial position. And then as my trade progresses, if I have, well, let's say the market goes on a little bit higher here, if I have more open profit, I will move to a more aggressive stop strategy, maybe something like the parabolics or the bar high low, which will get my stops in really, really tight so I can protect more open profit. But that's just a real quick overview. The important thing to take away from this is that the trade manager controls your risk. So you don't need to worry about keeping your stops at a preset amount, or, you know, do I just run them on the hard edge of the cloud, or what do I do with it? You set yourself a reasonable stop and you let the trade manager control your risk.
The trade manager is, in my opinion, the secret sauce to it all. You know, if I had my way, every single one of our customers would be using it. That's the product that at the end of the day, a month or two after people buy a system from us, I get that phone call of, why didn't I know about this 3-5 years ago? And the answer is, well, it didn't exist for the retail market back then. That's one of our other claims to fame, is that we've brought what traditionally is an institutional approach to trading, which is protecting your money, right? I know that sounds like a wild idea, but I promise you, if you go and talk to professional traders on the institutional side, they don't have Bollinger Bands, on their charts. They don't have some wacko moving average cross. They're all about protecting their assets so that they're in control of their risk for when they get the big move, and then they size the position correctly to maximize the profit. That's what Trade Manager does for you. By far the most important component to any trading system, including this one, which is that proper risk management. And then what Eric was talking about was the automated trailing stops. We thought it makes sense, which is once the trade's in play, which tends to be a very emotional experience, let's let technology reduce some of the stress and the emotion and let it trail the stop for you. However, as Eric just talked about, you still have the option to adjust your trailing strategy as the market structure changes. Another housekeeping piece I forgot to mention, our focus for 2017 is all about account growth. That's one of the things when we did a debriefing at the end of last year, we said, okay, what is it? How can we best serve our community? And we realized that the technical piece of it's important, right? Recognizing signals, etc. But talk about being in the trees as opposed to the forest. I might even argue you're down in the bark. And so long-term success is based on growing your account, not necessarily finding the perfect, and let's face it, unfindable signal. And also Eric's specialty is helping people who have smaller accounts grow them so that it's easier for them to trade. And anyone that's been in this business a while knows that the larger your account, the more latitude, the more flexibility you have to size your positions correctly so that you can, again, take advantage of the big moves without ever putting your account at risk beyond a fixed percentage. That's the secret sauce, fixed percentage risk. All right, any closing questions? Let me have a look real quick. Will the room be recorded in case we need to miss some of the classes? Yes, Marlene, for sure. And is the trade room? Great question. So what system or systems will be in the trade room? For anyone who owns the diversified trading system, yes, Eric will still have that on a screen and still be using it. I will tell you though that there'll be initially more of a focus on Raptor 2.0 just because we're going to have new owners in there, and quite frankly, it's it's the latest and greatest. If you need to reach me, very simple. It's adam@indicatorwarehouse.com. That's an easy one. And Eric has his own email. That's eric@supportandresistance.com. Feel free to contact me directly, and I'm happy to talk. Thanks, folks.